Cap Ventures. It's a homegrown venture capital firm that supported Indian entrepreneurs. And he's in the news because he just had a spectacular exit. So first, let me welcome Mr. Vikram Gupta and ask him how have been his last 12 months, both personally and professionally. Vikram, welcome to the BWVP World Dialogue. How have been your last 12 months personally and professionally?
So thanks a lot, first of all, Anurag, for having me on this show. I'm really delighted to be here. And of course, last 12 months, to be honest, have been a mix of both full of challenges as well as opportunities. On the personal front, of course, we've been taking a lot of precautions and staying home most of the time. Started working from office from September onwards, and from January we've been working full time. But I would say from a professional perspective, mostly it has been very positive because our portfolio has been, I would say, rewarded a lot because of this transition from offline to the digital world. Most of our portfolio actually operates in the digital world. So especially in the consumer space, we've seen a substantial shift happening. People who had never thought of going online earlier have suddenly started buying online. People even of the older generations, like my mother, now actually is looking to buy stuff online. So I think that has actually substantially changed the trajectory of this growth in the startup ecosystem, and we are quite excited about it. We as venture capital funds look for such opportunities, and I would call this as a point of inflection where VCs like us can make very good investments and grow along with the startup ecosystem in India.
Good to know that, Vikram. And Vikram, I remember meeting you in 2012. I had not acquired Business World then, and I was running Exchange for Media, and you did share this vision. And subsequently also, whenever you raised capital for the fund, you had conversations. Now, tell me, the Prime Minister has been talking about Atmanirbhar. The Prime Minister is talking about, the money for the funds being raised from Indian investors. Now, you've managed to do that fairly successfully, okay? First of all, I'd like to know from you that when you started with Ivy Cap Ventures, you had a dream, you had a vision, you had in some way, a resolve to be able to contribute to the journey of Indian entrepreneurs and build something solid alongside. When you look back on Ivy Cap Ventures' journey, what do you think you achieved as a fund and as a leader of the fund?
Yeah, no, I still remember those days are very fresh in my mind, Anurag, when you and I first met. I was talking about
we met at the Oberoi in Delhi. And my engineers my seniors from the engineering school, two of my very close friends who are seniors to me, made you and me meet, and you explained to me what you were doing and why you were doing. And you clearly walked the talk and you built what you set out to do. That was 2012 when I met you.
Yes. So you're absolutely right. I think we stuck to our whole focus and the principles and the vision that we started with. And I think that is what India needs and has been needing. My experience prior to that came from fundraising in a very tough environment. In fact, 2008 is when I raised my first fund, 400 crores when rupee was dollar was 40. And, going by that experience, raising a fund in those tough times when the markets were melting, gave me lots of ideas. First, I realized that there was a substantial gap in early stage investing. Second was that I realized that this whole investment world works through relationships and trust. And the trust comes best from the people you've known for a long time. And that's where the concept of the alumni connect came up, right? So when I was meeting any IIT alumni, irrespective of which IIT they were from, since I'm from IIT Delhi, the connect was instant. And that gave the idea that we should set up a fund structured around this whole concept of the alumni ecosystem. And I would say that worked very well for us because not only you see a lot of entrepreneurship buzzing in that ecosystem, you also see a lot of aspirations to support entrepreneurs, build entrepreneurship. And that's exactly what has happened with us. In the first year itself, we reached out to almost about 75,000 alumni around the ecosystem. And with that came a large inflow of entrepreneurs who were quite excited about, this opportunity of working with us. And in the process, we handpicked certain investments. Purple was one of them. Both IITians, IIT Delhi and IIT Kharagpur. And we just saw that spark in their minds. And I think it has worked very well for us, fortunately. So I think it's basically that whole connect in the ecosystem which has kept us going. And that core philosophy of investing and supporting the entrepreneurship actually continues with us as our philosophy even going forward.
I want to come to your investing philosophy, and then definitely I'll come to Purple and your exit philosophy. And but I want to first focus, there are three parts to what you do. One is to be able to raise the fund from your principals, from investors. Second is making the right investment decision in terms of choosing the founders and companies to back on. And now that you've been around for a while, and you invested at an early stage in a lot of promising startups, you are seeing exits. So I'll kind of pace it out.
Sure.
But let me first talk to you about, you talked about your business model being working around this IIT alumni. And clearly, IIT alumni have gone on to do well in various spheres. They've built large companies. So it's a good starting point. It's a good filter. And clearly, it's also the acquisition of targets is easier because I know you're very active in your IIT alumni. You helped raise that fund for your alumni itself. You got together and you were able to contribute a corpus to IIT Delhi. So really, I know you're very active and it's very closely in it. But tell me, when you're raising capital from Indian investors, what kind of nuances come into play? What kind of questions come into play? And has a lot changed in the last 2 years, especially last 12 months?
Very, very important question, Anurag. In fact, when I was raising my first fund in 2008, at that time, it was in the backing of a very strong brand of Piramal Group, as well as the former chairman of State Bank of India, who actually guided me through the whole process. I had no clue that the Indian institutional investors, even at that time, could be potential investors in a private equity asset class. And in fact, even at that time, of course, at that time, it was very new, even for them. But explaining to them this whole concept, it was purely a bet from their side to just see, how this asset class plays out. But I would say that, that relationships that I built at that time came very handy when I started the IV Cap, and that when I went back to them, that they valued the whole fact that there is this asset class which is important and which needs to be supported, even though until I would say recently they have not seen any returns coming from this asset class, and for them it has been extremely challenging to explain and justify why they should invest in this asset class at all. So therefore it requires a very high level of conviction and
a little long-term focus,
long-term view. And in that sense, I would say that some of these people who took that call at that time actually took the call on the ability of the team, on the potential for this ecosystem, and the ability of this IIT alumni ecosystem to be able to generate returns, and of course the corporate governance driven approach, because that's something we have never compromised on right from day one. We had a very, very strong and powerful advisory board. We had a very powerful and strong mentor structure. We were very powerful and strong reporting systems. So they've seen all that, and that actually gives them a lot of confidence with the level of transparency we've achieved. And for them, what is more important is that you are doing it with a genuine intent, and you are able to at least do the right things that are important and the outcomes they believe will happen. So I think that is the call they have taken. And I had about 33 Indian institutions as investors in that fund, which actually then in our first fund in IVCAP, we had 15 of them who participated. And then now we have over 20 Indian institutions as our investors, along with the IIT Alumni Trust as an anchor investor.
Fantastic. Now let me go to, how you choose companies, how you choose founders to back. Give us a sense of the process. Give us a sense of some of the investments that you may have passed, and you probably pretty much are wondering if you should have invested in that. And, so give us some anecdotes while you embarked on the investing journey. You got a lot of them right, but some you passed. So tell us which are the ones you passed that you feel you shouldn't have passed them.
So I still remember Yashish Dhaya as a good friend at the time when we were starting. He was raising his first 50 lakhs at that time. And when we started IVCAP, we were starting with the philosophy that these are institutional investors. They don't want to see investing at the seed stage. They want to see investing slightly at a, growth stage where, Series A, Series B. So part of the reason we kind of overlooked or turned down seed stage investment opportunities was purely because of that investment LP ecosystem that we had. And of course, there will be those kind of misses. And especially if you're operating the IIT alumni ecosystem, you would have seen many such opportunities which went on to become unicorns later on. And that has happened. and we learned our lessons, and we now launched an angel fund as well, where, it's basically positioned for the alumni, investing in deep tech companies even at the concept and seed stage companies, where we believe that you handpick some of these companies and who have the potential to become unicorns in the next 5-6 years. So those are the lessons we've learned. But, to answer your question, Anurag, I think the main thing here is the entrepreneur and the team where we invest most of our time. We believe that, what matters in the end is the passion that these entrepreneurs have. Are they going to stand there, when everything goes against them? Or are they just they're going to run around and, look for their alternative options? And that's what happens many times. This entrepreneurship has also become a buzzword and more glamorous these days. People think that, okay, let me also try this out. People are creating unicorns. Maybe I can also do it. If you're just trying it for the sake of trying it, it comes out very easily in the initial discussions itself. So we try to figure that out. What is driving you? Why you're doing it? Are you really solving a problem because you're passionate about solving that problem? So at the end, that's what matters, basically.
Thank you, Vikram. Now let's look at the sectors and some of the companies you've invested in and how they've done. And let's also look at some of the investments that didn't go well because the sector didn't do well or other reasons than the entrepreneur. So give us a sense of the sectors IVCAP is invested in, give us a sense of the companies, and then we'll come to the exits in a while.
So our fund one, we invested in 10 companies. Fund two, where we invested in another 20 companies. So total, we have about 30 companies in the portfolio. Of course, we had our share of learnings in terms of, companies that didn't do well. Out of 10 companies in fund one company actually didn't do well despite our best efforts. It was in the agri-tech space. And
yes, I remember.
Now, if I think about it, it was ahead of its times. In the year 2012, when we first looked at this company, they were solving a problem which we thought was massive, basically helping farmers get information on their mobile phones through SMSs in those days, getting or empowering them to help improve productivity and also sell their crops at much better prices in select mandis. So that was our first investment, in fact, from a fund one, and we were quite passionate about it. And smartphones came later on. The penetration of smartphones started happening in rural India in 2014-15, and during 2012 to 15, of course, it was still a very expensive process. Each SMS used to cost, sending out to these farmers. So the costs were very high. You needed people across the rural India, the number of people that you needed to support this. So therefore, you needed a lot of money to support this. So one of the key learnings is that, you know, you have to be very, very capital efficient in whatever business model you look at. And it's also a matter of timing. And when newer technologies come into play, your business model itself keeps becoming more capital efficient. And that is where, you know, I think, for the rest of the portfolio, fortunately, most of the companies have been extremely capital efficient. Purple is a great example. Clovia is a great example. And of course, now in the fund too, we have Biryani by Kilo, and also these companies are great examples of how they are making sure that they, use their capital very efficiently when it comes to scaling up their businesses.
Absolutely. Now, they say timing is everything. When you talk of exits, again, the timing matters. And again, there have been many theories around exit, and especially one can be greedy sometimes when one is getting a very good value. One believes maybe more value can be created over the next few years, and maybe one should hold on. So give us a sense of what's been your exit mantra. And I was talking to another friend of mine who runs possibly the largest media fund. And, he was telling me last year, Anurag, it's okay, we've invested well, but we haven't had a single exit till now. And then they were able to do that first exit, and they're looking at many. So exits are equally important in the business that you are in from two standpoints: validation of the business model that the fund has, and second is return for investors, which then becomes a playbook for future. So give us a sense of what happened with Purple, and congratulations on getting if my numbers serve me right, you invested 15 crores in Purple, and you've been able to get an exit at 300 crores plus, right?
320 crores, yes. No, thank you so much for that. And you hit the nail on the head when you said the timing is everything. Investment may be in your hands when you're investing, but exit is not in your hand. So you can try to time it the way you want, but it's extremely hard. And to be honest with you, until January, we had no idea that we would have sold this company before end of March. And it all started with somebody walking into my office and saying, hey, what are you doing with Purple? What's your plan with Purple? And I said, well, the company is doing great, and we hold a significant stake in the company, and we believe that over the next couple of years we'll create even higher value than what we are seeing right now. And there is no intent to sell. And somehow this person started putting more ideas in my mind. He said, look, there is a lot of demand for investing in this company, and people want to take a small pie in this company. They're trying to get in, but they're not able to get it because the company is cash rich. The company was not going to the market to raise their next round. So that gave an idea that, in any case, our fund one was reaching its maturity stage. And from a timing perspective, I thought it makes a lot of sense to really give that confidence to our investors, who are institutional investors primarily. And once they see these kind of returns, they would, of course, use this as a case study, as an example, to really then justify internally to their own boards, to their own investment committees, that this asset class makes a lot of sense. And it basically came from that whole thought process that, to be honest, if I purely took this decision based on returns, it made much more sense for me to stay on than sell at this point, because I think there are far more returns in this company going forward. And that's the reason we've retained a part of our stake in the company. We also invested from fund two, and that stake we haven't sold. We just sold our fund one stake, which was given 22x, fortunately. And our investors are extremely happy.
Great, Vikram. Vikram, I want to also ask is that over the next few months and over the next 18 months, you will see a lot of startups that are substantial scale and are in very promising sectors doing their IPOs. I mean, there is a talk of Policy Bazaar doing IPO, right? There is Zomato coming and doing an IPO. Possibly InMobi will do an IPO. Especially we saw the Nazara IPO last week. So give us a sense of, with the success of these Indian startups, truly homegrown, has the interest in investing space at early stage gone up? So are more investors kind of, uh, if I may use the word, lining up to be able to invest in the fund and offer even much larger amounts of money to be invested in the fund? Give us a sense of what's happening.
So I would call this stage as a point of inflection in the entire Indian startup ecosystem. And I think the reason I call it as a point of inflection is this shift which has happened in the last 12 months towards digital movement. I think that has substantially changed the way the startups are looked at. That I think has also attracted a lot of capital and is attracting a lot of capital. I believe that India itself is becoming a much powerful story. And we all know what is happening with China, and there is historically a lot of investments happening into China. And lots of those investors who've been trying to look for opportunities there now looking for alternatives. And India does offer that alternative option. So in that sense, I think timing wise, I would say it couldn't be better. The startups will have to really leverage this. And, as you said earlier, timing is everything. And I think this is a perfect time to really position yourself. And also from an IPO perspective, I think the market is ready. The market is really, I mean, historically, if you see the kinds of questions people have asked, people were wondering, especially some of these organized institutional investors, they could never understand why a Flipkart commands a $21 billion valuation when the company is loss making. They just couldn't understand how a loss making company can have so much valuation. And I think now that that thinking is sinking into the minds of people, that it's all about what you're building as a very powerful platform or a powerful ecosystem which can generate substantial profits in the future. Amazon has been quoted as an example where the company made losses for a long period before they started generating substantial profits. I mean, they generated losses for a long period. So I think now Indian startup ecosystem is actually also able to justify that, when losses happen, they happen for a reason. You actually make those losses because you're okay to make those losses. You need investments to support those losses, but the idea is to reach to the masses and to create a very large target market. And I think now I would say the investors have understood that philosophy, and therefore they're willing to put their money and test it out. And exits like these, where they see domestic investors actually making money, give them even more confidence. So which I think I call it as a defining moment for the Indian industry. Uh, I would say that it's a historic moment for the Indian industry where domestic institutions would have seen this kind of a return, and therefore building their confidence in the venture capital ecosystem.
Fantastic. Now, I want to ask you about two aspects. One is valuations. Over the last 12 months, the valuations seem to be more palatable. But in the last 60 days, looks like because of the acceleration in digital and some players doing very well, their valuations have really gone to another level, right? So tell me, if you had to make a comment on valuations, what would you say?
Valuation, of course, is a function of various things, and it eventually boils down to demand and supply. And currently the demand is much higher than the supply of good assets. Of course, there is good assets always available, but there is a lot more capital now, in my view, chasing good assets. And when that situation happens, the valuation does get impacted, on the positive side for the entrepreneurs and on the not so positive side for the investors. The investors are always looking for a better entry point. So I think, the multiples are going up slightly, especially in the D2C space, even in the B2B SaaS space. People are seeing significant growth in those areas, and therefore, people with the projections, future projections, which are looking quite good. People are asking for higher multiples. So it's purely a call one has to take in terms of what's the right multiples to give. But I think it's very situations driven in today's market. You've seen on an average the multiples have gone up by at least 20 to 25% as compared to in a regular market. If you bought an asset or you made an investment, let's say in the last 12 months, you would have got a very good entry price at that time. In fact, we were quite fortunate ourselves. We made 4 investments in the last 12 months, which we were able to get very good entry price. And all those 4 investments already are high in demand for the next rounds and much better valuations that we had entered at. So in that sense, I think it's a good opportunity for entrepreneurs to build the right story, to make sure that they pitch to the right investors. But at the same time, for the investors, I think they will also have to think from the perspective of first finding the right assets, but at the same time, if they have to pay a little bit higher, they'll have to take their calls accordingly, depending on the time frame that they're looking at.
Okay. Now, let me ask you, what do you think has changed in the mindset of the entrepreneur, the founder? What has changed in the last 12 months? And out of that, what is here to stay?
Yeah, I think that's also a very important question, because I would say that last 12 months has also separated boys from men. There are people who kind of just couldn't handle this kind of a pressure. They never anticipated a situation like this will arise, when suddenly the cash will dry up in the ecosystem, and all of a sudden you'll have to work very differently, work from home. All your customers will suddenly become inaccessible physically, but they will start using this online medium through video meetings as a common way of meetings. And that means even your competitors will have easy access to them now. Locations won't matter. So the market dynamics changed quite substantially in the last 12 months. People who were stressed already just before COVID, they died their natural death during this time, or an unnatural death, whatever you may call it. But people who always had managed their businesses in a very capital efficient manner, they survived very well. The capital efficiency is one of the clear winners in this whole testing times. And that is going to continue to stay. The capital efficiency mindset. You can't be throwing your money just to buy revenues, which historically people have done just to create valuations, and they were throwing money to just buy customers, which has actually changed substantially. So I would say it's good also for the investors to have seen on the other side of the pandemic, even though it's not over yet. Situation is still there, but at least we've crossed most of the challenging times, and with the vaccine out there already, at least psychologically, people are getting more and more comfortable now. But it has changed quite a bit, the mindsets of the entrepreneurs, customers, investors, employees. Productivities in general have gone up across companies. Customers are taking calls on video calls in terms of giving business. Investors are deciding to invest even without meeting in person.
Yes, that's a big change. Earlier, the investors would spend series of physical meetings, visiting offices, doing social interactions, and that's now just boiled down to video interactions remotely and moving forward on investment basis. What you gather from that?
Absolutely. So these are some historic changes which have happened, but all for the good, I would say. And the entrepreneurs are in a very good position, in my view. And good entrepreneurs will get good investors at good valuations, and good capital they'll be able to attract. So this is a good time from that perspective.
Vikram, clearly your exit from Purple has emboldened you to be able to raise more money from Indian investors, from domestic investors. Give us a sense of what are your plans for IV Cap Ventures over the next 12 to 18 months?
Yeah, so you're absolutely right. It's a historic moment for us as well at IV Cap, and the morale of the team is at the highest point. Our entire ecosystem of mentors, advisors, alumni are all very excited. I think part of our thesis is already tested. The other part is yet to be tested. Part of our thesis, which is yet to be tested, is also the give back. Part of our profits, we've actually committed to be given back as endowment to the IITs. And that starts, once we paid a minimum hurdle level to our investors. And it's almost there on the corner when we'll actually start returning the money and start building the entire endowment ecosystem in the country. Having succeeded with the endowment fund of IIT Delhi, and this is something which now everybody is talking about, and people are quite excited about setting up this ecosystem around. We believe that we do have a responsibility to actually continue to build this ecosystem around the country, and India is definitely ready for it. US has done it long time back with large endowments. So we believe that our vision continues to be to really enable this entire ecosystem and create India on the map of being one of the top, if not the top. Of course, it's right now the third largest ecosystem. But in terms of the venture capital ecosystem, I believe that we have the ability to bring out, a VC fund out of India being the global example of a model which becomes a case study for others to follow. We haven't so far seen any US VC funds or any Chinese VC funds. Maybe there are a few examples here and there trying to follow similar models, but not exactly the same, working with the colleges like IITs, giving back as endowment, part of the profits, and building the ecosystem. So I think this is what personally motivates me and excites me. Over the next 12 months, we continue to build momentum in terms of building our next fund, which is already quite, getting subscribed through our existing investors and quite a few new investors. But at the same time, we'll continue to invest with the same philosophy, adding impact as an angle to our investment philosophy. SDG framework is something that we've integrated into our investment philosophy. We strongly believe that sustainable development goals is something which is absolutely required when you actually think of entrepreneurship. You also have to be aware of your environment. You have to consciously contribute towards, building a good and healthy living for everyone. So that is something which we believe is extremely important, irrespective of whatever startup you're doing. So that is one of the core philosophies that we are going to build our investments and the funds going forward.
Thank you so much, Vikram. Clearly, the ESG space has become an important space for all investors, and really ESG compliant funds and ESG driven funds will be able to make more contribution to not just profits, but to the planet, to the purpose, to people. And sustainability is really an important goal that we have been chasing over the years. And India's unique problems need unique Indian solutions and Indian entrepreneurs to be able to do that. So we wish you luck in your endeavor to contribute to the acceleration of the Indian entrepreneurial ecosystem, the Indian venture capital ecosystem. And I'm sure that IV Cap Ventures will continue to raise more capital and deploy basis the success of the unique business model that you pioneered. So congratulations to you. We wish you all the luck, and we look forward to having a conversation with you soon again. Thank you so much.
Thank you so much for this opportunity, and really great talking to you.
Thank you so much. Thank you.
Bye-bye.